Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, good morning. Welcome to Insurance Matchmaking. And guess what? You don't have to listen to just me today. I have a guest, Danielle Rolfes with OneAmerica. She's come in town, helped me with some long-term care alternative stuff. We're going to do a little workshop at my office, and hopefully, maybe we'll do that more often, but we're going to talk about some of those things. Of course, when you're hearing this, we've already had that in-person presentation, but I wanted to cover a couple things just before I introduce Danielle. Yeah, yesterday, and as we're recording it was yesterday, I attended a symposium, conference, whatever you want to call it, in Nashville. We have our lobbying organization for health insurance, just predominantly group insurance people, but it's called NABIP now. It used to be called NAHU. Some people said NAHU, and that was subject of discussion yesterday. Well, was it NAHU or NAHU? So is it NABIP or NABIP? And I said, I've actually heard someone say NAHU is now NABIP.
Oh,
so they did the different vowel sound.
Yeah.
But it's the National Association of Benefit Insurance Professionals. And so I am a member of the Tennessee chapter of that. I went. And I just wanted to talk about this book real quick. We're not going to talk about this in the show, but as they say in the showbiz, we're going to tease it. But the title of the book, I love it. Never Pay the First Bill.
Wow.
And it has to do it was targeted for, again, the group insurance, but the example that the author, he wasn't there yesterday, but he was able to Zoom in. So we saw him live, but he wasn't at the same location. But just one of the examples that someone was able to be successful from this book was a young lady who was being denied cancer treatment by her group plan.
Oh.
And her broker went to bat for her in emails and letters and phone calls to people, decision makers, and got her approved the same day.
Oh, my goodness.
Yeah. So it's like, I'm going to read the book. We'll probably do a show on it. I may do a separate YouTube on it, but I wanted to tease that. But anyway, Danielle Rolfes with OneAmerica. I don't know if I've talked much on my show, but I know I have, like in my newsletter, I talked about Gordon Marketing, which is my upline, as they call it in the business, is in the Indianapolis area, and OneAmerica's headquarters is in Indianapolis area. Yeah. So they work very closely together, and I was working on some quotes for a long-term care solution for one of my clients. Well, they forwarded it to Danielle because she's our state sales director. She's like, hey, I want to come meet you. So that's how we got here.
Right.
So, Danielle, welcome.
Thank you. Thanks for having me.
Anything you want to start off with here?
Well, no, just I hope when you're talking about me, it's all good things.
Yeah, there you go.
So glad to be here to help you and meet your listeners, so to speak. So thanks for having me.
All right. So anyway, Danielle's specialty is kind of, we don't want to talk about it. And I get a lot of questions on it because people, when I'm meeting with people with Medicare, and they'll ask me about long-term care.
Yeah.
And then they find out how much long-term care insurance costs, and they're like, oh, I guess I just hope I don't end up there. Yeah. So that's a big concern. I've had two, and just in the last, it's maybe a little over a year, but in the last 2 years anyway, I've had two people reach out to me and ask me about long-term care insurance when they need it.
Oh, right. People wait till they get sick, and then they need insurance. I get it, but unfortunately it's too late then, right?
I think some of that is because, and I do the under 65 ACA insurance, as you've heard me talk about on here, is guaranteed issue. There's no pre-existing, well, yeah, there is. Maybe not on a major, there's no more pre-existing on major medical. Right. Whether it's your Affordable Care Act plan, whether it's the plan you have through work, private insurance. Now, there is private insurance out there, health insurance, that still require underwriting.
Sure.
Somebody wants to get a cancer plan. It will pay out if they get cancer. Yes. If you got diagnosed 3 months ago with cancer, you can't get that plan and then cash in.
Right.
And I think that's kind of obvious to people. They realize that, but they think, well, it's health insurance. I should be able to get it and not have to pay so much. Well, no. Insurance is that exchange of risk. It's when I talk to my friends in the PNC market and they say, well, it's too late to buy fire insurance when you smell smoke.
That's correct. That's a great example. I've actually used that a lot.
So a lot of times what people think that Medicare is going to cover.
Oh, that's a great question. I get that most every conversation I have. right? They think it's going to cover, and it's not like they don't cover anything. They just don't cover very long.
Yeah.
I kind of call it short-term care. Right?
Yeah. And we do have, and it's one of the things, and it's not one of the things OneAmerica does. I do offer, and I've talked about just recently about the short-term care plans. Right. And I actually heard an interesting, I don't know, it was one of the carriers reps was talking about, we have to call it short-term care because the phrase long-term care was already taken.
Oh, I think it's if it's over a year.
Yeah.
Yes, care.
And that's the thing. The short-term care generally goes for a year.
Yes.
Now, one of the interesting things on that, one of the plans that I didn't think about it was you have so many days of benefits.
Correct.
And it's like 360, I think it's 360 days.
Yep.
But that 360 days could take 3 years.
It could.
It's the day and how many days you're using the service. Mm-hmm. And so it's a lifetime. So that's why they say, it really can be kind of a long term. It can be more than a year, but because of the way it's designed, they have to call it short term care. So a lot of people think, I don't need short term care. And it's like a lot of people need short term care more than they need long term care.
Yeah, It just depends on the person, right? And that's why you have an insurance specialist like you. Because you get to figure it out for them because, we don't all need the same things. That's absolutely right.
And the cash outlay is quite a bit different. The short-term care is generally, I say it's affordable. Anytime when you talk about anything in the health insurance field and it's less than $100 a month, maybe even less than $50 a month, that should be considered affordable.
Right.
That's not happening with long-term care.
No.
It's going to be more than that, especially, again, I'm dealing with a lot with people who are on Medicare, and now they're asking about it. You're about 20 years behind. The old saying, when's the best time to plant a tree?
Right.
30 years ago.
Yes.
When's the second best time? Today.
Yeah.
So unfortunately, that now that it's today, because you put it off, 30 years ago or 20 years ago, it's going to be a lot more expensive. It's one of those things. Those things go up as you age. Now, one of the things that I hate, I think I can say that, traditional long-term care insurance, it can go up.
Oh, absolutely. And it not only can, it does go up. You have to count on it going up as an insurance person, right?
Yeah.
So, those prices can double or even triple in your lifetime. So that type of long-term care is probably less popular today than I've ever seen. It's more of an asset-based approach today so that everything's guaranteed. So you can get guarantees, but you need to have some assets to protect.
Right.
So to make that make sense, right? So
yeah. And that's the thing. And when we talk about people, it's like, well, do you want to spend all your retirement on long-term care?
Right. Of course you don't, right? But you can do some things by just moving something around, maybe a CD, a little piece of your IRA, and still have your money and not have to worry about premiums, not have to worry about it going up. And then if you need the long-term care, it's there. And it is there for a lifetime, which is expensive today. Memory care, I don't know. Do you know what it costs in this town for memory care?
I should know. I know you can figure basically $3,000 to $5,000 a month.
Oh,
easy.
That's easy just for regular long-term care. If you get into a memory issue, it can be triple that.
Oh, wow.
It's crazy. And that's why people plan and they say, hey, I want to transfer that risk to my insurance company, just like you would with homeowners, right? You might be able to rebuild your house, but does that make sense?
Right.
If you could have bought insurance for pennies on the dollar, it makes more sense to insure it.
Right.
Yeah. So.
And that's sometimes when I talk to people about health insurance and they get a high deductible plan and it doesn't cover anything. And it's like, and I'll do the analogy. I said, I've had this insurance company for years insuring my car, and they haven't paid for one oil change.
Right.
It's insurance. It's like, but hey, I tell you what. When I busted my knee and I saw the hospital bill and I didn't have to pay what the hospital's bill said.
That's right. That's right.
Fortunately I had other insurance that reimbursed, and that's why, I'll do a little plug on some of the, the gap type stuff.
Sure.
That, because I did have about $1,000 out of pocket.
Okay. Yeah.
For my, ambulance ride, emergency room, night in the hospital, and surgery on a Sunday and home late Sunday night. Because it's considered outpatient surgery. But since once I presented with the injury, they had to keep me till I could do it. Yeah. But and then I had other insurance that covered, some of those hospital expenses, the accident expense. And so I had other insurance that paid. So basically, really, in a lot of ways, I had no out-of-pocket cost. But because of insurance. But it took more than one insurance to get me there.
Yes. And again, that goes back to you being an expert in it. You know how to do this and put it together so that you don't get in a bad situation. Because $1,000 out of pocket's not great, but it's manageable.
Right.
It's manageable because you had all the big expenses off your plate, not
Now,
risk.
Now, one of the things in the presentation that Danielle's doing for in my office for me, I haven't seen the presentation. I've looked over the slides. I know the general gist of it, but in a lot of ways, we talked about how expensive long-term care insurance is.
Right.
But when you talk about the asset-based, it's not as much an out-of-pocket cost as just a rearranging of funds. Do you want to kind of expand on that?
Yeah, I'm happy to. I always use my mom for an example because she's been gone 15 years and she had her policy 17 years. So these products have been out there a long time. But when she did it, she put $60,000 in from a CD because I asked her when the last time was that she had taken money out of that, and she named the last 3 banks like 30 years that she had taken money out of that account. I'm like, okay, Mom, you're not actually using it. We need to worry about your health care because her mom had Alzheimer's and her dad had Parkinson's. So there's a real risk that she could run out of money. So she put the $60,000 CD in. That was still her money. The insurance company put another $40,000 on it. So if she had just died, it would have left $100,000 to my sister and I. Now, my sister and I did not care about that, right? We cared about her not running out of money and being at home where she wanted to be. But she also put a lifetime extension rider on it. When somebody says rider on insurance, it just means extra insurance, right?
Right.
So we knew if she ended up with a big long claim like her parents did, that she would never run out of her own money, that we would pay $4,000 a month from the insurance company for her for life. And she had 2 times that she used it. She had it once for, she was dancing at my niece's wedding, and my dad spun her out. Down she went. Apparently she had a great time. She was, having fun with the firemen carrying her out, so she must have had a glass of champagne. I don't know.
Yeah.
But that hip didn't go well fast enough for Medicare to pay everything. So she wasn't showing improvement, and they sent her home. So we pulled about $13,000 out of the 100. And then a couple years later, she got cancer, and, Medicare paid, almost everything.
Right.
The surgeries, the chemo, the radiation. But then when she got ready to go home and she's all by herself, she's like, I can't raise a washcloth to my head. And I said, Mom, that's why we have your plan. Let me send a home nurse over.
Yeah.
So we did, and that was another $40,000. So that was about.
And you mentioned you send the home nurse over.
Yes.
Medicare's not paying for that.
They're not paying for that. And so that was $57,000 of care out of her 100. And she passed away then, so she passed the rest of that 100 to my sister and I.
Yeah.
So somebody always gets the money. That's the difference with this kind, where you kind of just move around a chunk of money. You're going to get it, or your family's going to get it. The insurance company does not get to keep it.
Right. And I love that what you were saying. Somebody's going to get the money.
Yes.
Why should it be the insurance company?
Right. That's right. So
that's why they could put their names on stadiums and such.
Right. Well, because people think of it like car insurance. If you don't wreck your car, they don't give you your money back.
Right.
But in this case, it's like more of an asset that you keep, and you just have it saved in a place that takes some risk off of you. So it's the popular way to do it today because people don't want to have the premium rate increases you were talking about. So this is all guaranteed. What they tell you is what it is.
All right. Well, we're up on our first break.
All right.
Believe it or not, like I said.
Hello, this is Mark Dahl, your local Twin Lakes Business Solutions consultant. As weather warms up, it's easy to let your guard down, but we're here to ensure your business stays on track. Explore Twin Lakes customized solutions designed for your business of every scale. Experience lightning-fast fiber broadband speeds up to 10 gig, dependable phone and conferencing services, and round-the-clock tech support to keep your operations running smoothly. Don't let your business miss a beat. Reach out to me today at 931-823-5511 or visit us online at twinlakes.net.
Looking to spruce up your home without breaking the bank? Visit Habitat Restore for incredible deals on furniture, appliances, home decor, and more. Plus, when you shop at Habitat Restore, you're not just getting great deals, you're also supporting your local community. Are you looking to make a meaningful impact? Consider donating to Habitat Restore. Your generosity can make a world of difference. Habitat Restore, open Tuesday through Saturday, 10 a.m. to 6 p.m., and located at 560 South Jefferson Avenue in Cookeville.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back to Insurance Matchmaking with my guest, Danielle Rolfes with OneAmerica. And we were talking there in the commercial break, of some of the limitations people figure they've got with these plans, that, sometimes because we talk about an annuity or, the asset base. One of the things they specialize in, they have the annuity, what's called asset care, and then they have annuity care, and then asset care is the whole life.
Yeah.
I mixed up the names.
It's okay.
I actually have annuity care. That was one of the things that when I heard about it, I was like, yeah, this is what I need to get. My wife and I are not in perfect health, and we were able to qualify for the long-term care portion of that annuity. She retired from her job, and we had, unfortunately, I wish we'd have done it a little sooner because that 401k that she left with her from her employer wasn't worth as much when we rolled it into our annuity as it was when she left the employer.
Yeah.
So we lost a little bit there. Unfortunately, when we did start the process, it had recovered some, so we didn't lose everything. But that's the beauty of annuity. You don't lose it, folks.
Right.
You know, 401ks are great, but that stock market takes a dive when you think you're going to, if you got time to wait for it to build back up, you're probably in good shape. And that's probably subject for another show. But you mentioned some of the ways people can pay for these.
So some people, you moved an asset, and that's very typical. Sometimes it's an IRA. So most people have IRA dollars today. There's less pensions than that used to happen. So people like that. And when they do a rollover, it's tax-free, and we add a 25% bonus. So people like that a lot, right?
Yeah.
So that's good. But it's really there to help give you a bigger long-term care plan. And give you some tax advantages. So if you need health care, it's tax-free. But I'm glad you brought up the health, Matt. People ask me, they think they can't get insurance. Because I've had 85-year-olds in my classes this week, right? And I say, no, we have something up to 85. I know you think because you had heart issues or stroke or cancer that you can't get insurance. This is different. This allows those kinds of things.
Yeah.
So really the only things you got to watch out for is if you're already having mobility issues or memory issues. And we all know if those things are happening.
Right.
But if it's other things, we have a lot of options. So I tell people, don't count yourself out. Don't assume you can't do it. Talk to Matt,
And you mentioned the mobility issues because that's one of the things, too. My wife did, and that was sitting there. So she had surgery after.
Yeah.
Because she didn't have surgery scheduled for her knee replacement, but she was having arthritis in her knee.
Yeah.
She was using a cane.
Yeah.
But the underwriting is, do you have the cane with the 4 legs?
That's right. If you only have a single point,
no,
don't
care.
care.
Now, she did the rubber thing that makes a little square bottom on the
Right.
But it's if you're prescribed that cane with the 4 legs, that could be a knockout.
It can,
but just
that's
walking
mobility.
with a cane is not.
That's correct. Yes. So you have a lot more ability to get something in place and help yourself than you think.
Right.
Even if you feel like you're a little older or have some health issues.
I think and we did not have to go to the doctor, do blood tests and all that. It was all. I mean, I guess there was probably the medical information board and telescripts check, but it's a phone interview.
That's right.
Now the fun part about the phone interview
it's funny.
is there is a memory test. So they do, as you mentioned, memory issues, mobility issues. Those can be knockouts because those are the things that you go to long-term care for.
That's right. Can I explain what the memory test is? Because
Sure.
I think it freaks people out, right? Like if you ask me what I had for lunch yesterday, I honestly don't remember, right? So everybody's worried. But if you're over 60, they'll tell you 10 words at the beginning of a call, and at the end, you have to be able to remember 6. It is very rare somebody doesn't pass that.
Yeah.
And when they don't, it's usually because they were distracted. Like, I had a farmer on a tractor once. I'm not sure if he couldn't hear or not. I had a CEO on a golf course. They're like, no, we need to reschedule. He's like, oh, well, no, I'm too busy. Failed it, right? So don't worry about it. Just relax.
Now, what's
and
the process there? Is there a waiting period to retake it if you fail?
Oh no, if you fail, you have to go through an entire memory thing at your own expense.
Oh, okay.
It's not fun.
So it's a doctor appointment and all that.
Just pay attention. It's not that big a deal. Don't freak out about it.
Yeah.
But don't be distracted either.
Right.
So.
Yeah, actually, funny. The symposium I was just at, that was the last session, was a gentleman that's written a book, and I don't remember his name. If I had the agenda in front of me, I could look at it.
Yeah.
But it was memory.
Yes.
And he was showing ways. And it was really neat because he started a thing, and I probably can remember him now just because it's the mnemonics that he kind of showed how to do. But it was, chef's hat, mud, money, jackhammer, van,
you remembered pretty
hair,
well.
tie. And actually what it was, and this is what was really interesting, so he said, well, okay, he did the list, and everybody, and it's like we were remembering like the first 2 or 3, getting them out of order,
right?
And then he started to think, well, picture something, you know. So the washing machine, you can have the apple going in the washing machine. You can have the chef's hat coming out of the core of the apple.
Right.
All these little visual hints.
Yes.
And then turns around, and it was like, well, you just named the first 10 presidents.
Oh,
washing machine, George Washington, Apple, Adams, Apple, chef's hat, Thomas Jefferson.
Okay.
And so it was,
Okay.
And that was how, it got,
Yeah.
and did it. And it's like, wow, that really makes a lot of sense.
It does.
Because
Yeah.
I don't know how many times, and we talk about memory issue, but, and I know, and I try to do it, when you meet somebody and then repeat their name.
Yes.
Repeat it back. But you're also introducing yourself. So it's like my problem, and I've done that. I know, and I'm saying my name.
Right.
And then I go, what did they just say their name
happens
was?
to me
it'll
too.
go that quick, and you're afraid to.
I know.
Can you tell me your name again? I forgot it this quick.
I know. I have a name thing, too. I get it. That's not uncommon. And that's not usually a problem for the test, just so you know.
Yeah.
They don't ask us names.
Right. Yeah, with the different animals, and
Yes,
that's always fun.
yes.
So we talked about the underwriting on that. You can be, you can be diabetic.
You sure can. I mean, this might be some good news for your folks out there. I mean, if you look at heart, cancer, stroke, the fatalities from that are so far down. That used to be the thing that you would cause us to use a long-term care plan, but they're getting up past all that today. I've got a stage 4 lung cancer brother-in-law walking around with no medicine or anything 3 years later.
Yeah.
I mean, they're really curing that stuff up front. So most people are at risk more for memory care today, and that's the first claim that we get most of the time.
Yeah.
So because we live longer, but we still have some memory issues. So that's why we do long-term care, not short-term care.
Right. Yeah, and that was the thing. I was listening to a podcast this morning. Companies that's going to, and it's not a company I'm associated with. I don't know if I will, but they're going to add a cancer, heart attack, stroke, indemnity plan.
Right.
Most plans, life insurance and other plans, to look back on cancer now is 5 years. It used to be 10 years. It's like you had to be cancer free for at least 10 years to be able to get life insurance, or get a cancer plan, or get a plan that, okay, we'll cover this, but if cancer comes back, we're not paying for that. It's not considered a pre-existing condition.
Do you know ours
when you
is
don't
only
when we
6
call, when we
months?
say look back?
Ours is 6 months, and no table 4. That's it. So it's so short now. You're right, Matt. It used to be 5 years plus.
Yeah.
So it's really showing you the changes in people's health care today.
Right. We talked about monthly costs because one of the things we talked about rolling the retirement plans, the qualified plans as they call them.
Sure.
And it is a qualified plan, so you're good there. You can roll it over. You hit 70, you're going to have to do what they call the minimum distribution.
Right.
Hopefully you have another plan maybe that you can take that minimum distribution out of, so your long-term care is not touched. But, if that's the only qualified plan you have, I think is that age 70 or
it's 73 now.
73.
They keep
You will
pushing it
have
back.
you'll have to start drawing that out. I actually have an IRA. When my mother passed, I inherited from her, and of course she was already having to do her minimum distributions.
Yes.
So I have to take a minimum distribution out of that
Some
plan.
people use that because if you don't need it for income, they'll use that to pay it. Or some people don't want to roll money; they want to have all their assets somewhere they really like right now.
Yeah,
you can just pay monthly or pay annually with your RMD, your required minimum distribution, or anything else. So you have lots of choices of how to pay for it.
So you have the Asset Care whole life plan.
Right.
You can do it as a lump sum,
right?
But you don't have to.
But you don't have to. Absolutely right. You can do it monthly, 10 years, whatever you want. You can also put your spouse on the same plan like you did with your wife.
Mm-hmm.
So that's really unique that you don't have to buy 2 separate insurance policies because it's cheaper to buy one.
Right.
And you don't have to guess like, well, she's a little sicker than I am. Maybe I'll just get it on my wife. No, you can just both go on it. Nobody has to guess who might need it. And you both have support.
Now, what are the different terms? I want to say terms, and I'm talking about a whole life plan. That could be confusing. But payment, because you can do a one-time lump sum payment. You mentioned 10 years, what we call a 10 pay.
That's right.
What are some of the options?
5 pay. If you're trying to do it before you retire or something, you could do a 20 pay or even a pay to age 95.
Pay to 90. I was trying to remember. I was thinking it was one to an age.
Yes.
So you don't have to come up with a whole bunch of money at one time, but you can you're funding your long-term care. And I think that's where it's a hard sell. What was it? Someone said something about you enroll people in health care.
Yeah.
You sell life insurance.
Well, I think that's true. Just
'Cause
because
it's like-
most people don't wake up and say, "I need life insurance,"
Right.
because they're, they don't really understand the risk that they have. But they know health.
Yeah.
They understand that.
So I know a lot of people, object. They think that whole life is not a good, it's not a good. Well, it's not an investment. It's one thing, but it's maybe not a good use of your money.
Right.
We have our friends out there that like to say, buy term, invest the rest. And the problem is most people don't invest the rest.
That is the problem. That is the
So
problem.
and the thing is, if it's your life insurance,
Yeah.
you're going to make sure it's paid every month.
Right.
So there. The tough part is with whole life, you're going to be paying more up front. There's more costs up front.
Mm-hmm.
But with that whole life, but you're building an asset. You're not just buying insurance. I mean, there's a cost of insurance. The cost of insurance is basically probably what you would be paying for a term plan.
Right.
But you've locked in that rate. So whether it's 5 pay, a 10 pay, a pay to age 95, it's going to be the same every month or every year, however, your intervals that you're paying.
Right.
And it's your money.
Correct.
And you're putting it in
out.
a vehicle that can grow.
That's right. It is liquid, and that's something you don't get with term, right? That they've just keeping your money again.
And you can pass it to your heirs.
That's right. That's right. But, I think having the whole life be something different at a certain age, when you hit, we have a little gray hair, you and I both have some, you start thinking about health care more than death benefits for each other.
Now, we talked about, age, of course, on the 401ks and IRAs, we're dealing with people who are getting close to retirement. On the asset care, is there a minimum age?
35.
35? Okay.
Do you know our youngest person that ever used it was 39?
Oh,
had
wow.
an accident.
Yeah. And that's another thing, and we're probably going to have to cover that in the next show because we are coming up close
Sure.
to the end. Typically, I'm working with someone who's local, so I'll say, okay, well, how do they get a hold of you? Or
Right, you. That's how they get a hold of me.
Yeah, I was going to say this one's a little different. If you've got questions for Danielle, you need to contact me,
Right.
which of course you can go to insurancematchmaking.com. You can find me there, mattlibbyinsurance.com. That's my website. But I wanted to cover a couple of those things, and we're going to expand probably on those. We're going to do this as a second show. They may be, sequential weeks. Then again, they're depending on who I have as my next guest. I may want to get them into the show rotation before. So we're not announcing any events in this show, so the time should be okay. But I did want to cover that, and fortunately we have the time to do a second show today. So we will go forward with that. And also helps because I've got some vacation and some out-of-town trips coming up, so I may be able to have a show in the bank and not miss haven't had to play a replay yet.
Good.
I've had enough. Well, we had a snafu with the transmitter early on, so I had a show carryover, and then there's a couple times where I've done a couple shows in one time, and it gets me there. So until next week, see you on the radio and tune in to Insurance Matchmaking.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.